Hi everyone, welcome to Profit Path, hosted by Trader H, an experienced market strategist who spent decades working inside a major global investment bank. In this series, he'll break down the same professional frameworks used by institutions, but in a clear and practical way, so any beginner can start building wealth confidently. Today, we begin with the foundation of everything: how to build a beginner-friendly, long-term investment portfolio, step by step. Let's dive right in. What is a portfolio? A portfolio is simply the collection of assets you own: stocks, ETFs, bonds, or even cash. But a good portfolio is not random. It's structured to help you grow your wealth while protecting you from unnecessary risks. Think of it like building a house. You need a solid foundation, you need supporting structures, and you need a design that matches your lifestyle and long-term goals. In investing, we call this core satellite portfolio construction. Step 1. Start with the core. Your core is the stable, long-term part of your portfolio, usually low-cost, diversified ETFs. Why ETFs for the core? They hold hundreds of companies at once. They lower your risk, they're cost-effective. And historically, broad market ETFs outperform most individual investors. For beginners, your core can be built from ETFs like a broad US market ETF, e.g., S&P 500 or total market, a global or international ETF, a bond or fixed income ETF if you prefer more stability. Your core usually makes up 70 to 90% of your portfolio, depending on your risk tolerance. This core grows steadily over time and protects your financial future, even during market volatility. Step 2. Add satellite positions. Satellite positions are smaller allocations around your core that reflect your interests, convictions, or areas where you want higher potential returns. These can include individual stocks, sector ETFs, AI, semiconductors, clean energy, healthcare, thematic investments, robotics, cybersecurity, blockchain, specific high-growth opportunities you believe in. Satellites typically make up 10–30% of your portfolio. They allow you to express your personal strategy without risking your entire portfolio. A good guideline for beginners: keep each satellite to 3 to 5% of your portfolio. Avoid over-concentration in a single stock. Make sure satellites don't overwhelm your core. The core keeps you safe. The satellites give you upside potential. Together, they create balance. Step 3. Diversify. Properly, diversification is not just owning many things. It's owning things that behave differently in different market environments. A well-diversified beginner portfolio usually includes US stocks, international stocks, different sectors, possibly bonds or cash, a limited number of satellite ideas. Avoid common mistakes like owning too many tech stocks, holding 20 ETFs that track the same thing, putting 50% into one company because it feels safe. Diversification reduces major drawdowns and makes your returns smoother and more consistent, especially important for beginners. Step 4. Keep it simple. One of the biggest myths in investing is that complexity likes better returns. Most of the time, the opposite is true. A clean beginner portfolio can be as simple as 1 to 3 core ETFs, 3 to 6 satellite positions, consistent contributions every month. No need to trade daily, no need to chase news, no need for complicated charts. The simpler the system, the easier it is to stay disciplined, and discipline is what actually builds wealth. Step 5. Review regularly. Every 6–12 months, review. Has your risk tolerance changed? Are your satellite positions too large or too small? Has your core remained stable? Do you need to rebalance? Rebalancing just means moving percentages back to your original plan. This keeps your portfolio healthy and aligned with your goals. And that's it. A clean, practical way to build your first investment portfolio using ETFs, diversification, and the core satellite approach. In the next episodes, we'll go deeper into asset selection, risk management, and long-term strategies used by professional investors. If you found this helpful, remember to like and subscribe. Welcome to Profit Path. Your journey starts here.